Hello and welcome to the S2P Market Commentary, market week ending Friday, March 15th, 2013. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 2.15 to 2.48, advancing further within strongly bullish territory. The total count of securities in bullish or bearish patterns increased 2% to 2,439. The count of bearish stocks decreased 8%, while the count of stocks in bullish patterns increased 7%. The S2P P&F Market Breadth Summary Chart shows us the market now 12 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting S2PMarketSignal.com, clicking on Membership, and clicking on Sign Up. There is a 2-week free trial subscription available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 101 points for the 14th rise in 25 weeks. At a positive 614.28 points, it has broken above the February 2013 top and remains above the November 2010 top, the January 2011 top, the November 2011 top, the September 2012 top, the November 2011 top, the July 2012 top, the June 2010 bottom, the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the March 2012 bottom, and the November 2012 bottom, but remains below the February 2012 top. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 4 accumulation days and 0 distribution days. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in accumulation mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended the week in accumulation mode. Momentum. As expected at Monday 3/11 close, the CCI 20 daily had 6 days above zero to begin a Woody's uptrend. At 92.90, it is currently outside the range for a valid zero-line reject. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 5 weeks ago, while the daily CCI 20 began a Woody's uptrend this past week. The CCI 20 weekly now has 11 weeks above zero and began a Woody's uptrend 4 weeks ago. At 119.93, it is outside the plus or minus 50 range for a valid zero-line reject signal. Industry rotation the last 2 weeks. All of the top 5 industries are fractionally positive, and only 2 of the bottom 5 industries is negative. Bullish, disk drives, and computer hardware have entered the top 5. Bearish, S&P retail, and internet have entered the bottom 5. REITs remains in the bottom 5. Banks and S&P retail have left the top 5. Gold and silver has left the bottom 5. Oil services has left the bottom 5. Focus this week, quote, "We are transitioning from a society where we are skillfully manipulated by lies and illusions to one where we are overtly controlled," end quote. So says a very informative and deeply philosophical article, An Orwellian America, from Tyler Durden at www.zerohedge.com. This market commentary for the week ending March 15, 2013 is submitted by Donald Pearl. Thank you for tuning in for this week's market commentary. Happy St. Patrick's Day. Have a great week coming up, and happy trading.